Namaskar and friends. Today we'll take a look at Polycab Limited. Polycab Limited is under the control of Inder T. Jaisinghani and his family members. Most of the directors are from Jaisinghani family. Inder T. Jaisinghani is the chairman cum managing director. Now, it's a leading manufacturer of wires and cables in India. Allied products also like UPVC conduits, lugs and glands, not garlands. They have a range of cables and wires for almost all practical purposes in India. Polycab has also launched a wide range of consumer electrical products, so FMEG, like fans, switch gears, LED lights and luminaries, solar inverters and pumps. Polycab has 25 manufacturing facilities at 7 locations. 4 of the 25 manufacturing facilities manufacture FMEG products. Electrical. Polycab is its market share in wires and cables is around 24%. 4,300 dealers are there and distributors are there, and reach is 2,05,000 retail outlets. So quite a good and growing very well. Now they have got a scheme called Project Leap. They want to take the current revenue of around 12 to 13,000 crores. From there, it wants to take it to 20,000 crores by FY26 in another 3 years. So, they've got a confidence on that. Now, are we going to travel together with Polycab in taking this 30,000 crores revenue to 20,000 crores revenue? That each individual has to decide. Market cap is around 70,000 crores. Current price is around 4,700 rupees. High is 4,780. It is very near to that. Price earning is 48.7, quite high. But still, considering the long-term view, it may not be that high. Book value is 443 rupees. ROCE is quite good at 27.1%, and ROE is at 20%. ROCE, ROE both are very good. So 27% ROCE, ROE 20% is very good. Face value is 10 rupees. The price curve, if you examine that, you will see it is going like this, upward trend. Not going always like this, sometimes like this also, but generally like this. Company is almost debt free, so which is a very good thing. Low debt or almost debt free. Dividend payout is very healthy at 21.2%. Debtor days have improved from 43 to 32. Promoters holding has come down by around 0.41%. Not much, but 0.41% it has come down. Why they have drawn, we don't know. So it has got a high trailing 12 months EPS growth, 52-week high, very near to 52-week high, and it has established a new 52-week high. That is to be noted. In the days to come, it may go beyond that also, depending upon the investor sentiment. But the future seems to be very good. Company, as I said, low debt. Year on year net profit margin is good. Net profit and net profit margin both are good. Quarter on quarter it is slightly lower. That happens sometimes when fourth quarter results are generally annual results minus first 3 quarters results. So So that adjustment only is the thing. It is not actually only for fourth quarter. Annual net profits are jumping last 2 years. Book value is also jumping for the last 2 years, jumping up. Zero promoters pledge, no debt, no pledge. Both are very good, no? FIIs are increasing their holding, but local institutions are decreasing their holding slightly. Price momentum is very strong. Mutual funds have decreased their holding in the last quarter. Now, depending on their perception of the results, they may increase or decrease. That we'll have to wait and see. Brokers have been recommending the share very well. Then this money control has given it 94%. Technicals are very bullish. It's a strong performance. Quality management, strong technical momentum. Price to book is 11.73. Face value is 10. Market cap is 65,000, around that. Sector PE is 47.68. Book value per share is 367. Analyst rating based on 26 analysts is outperformed. It's a strong performer actually. It is a stock with consistent financial performance, quality management and strong technical momentum. Price is moving up always. Bullish momentum is there. 3-year CAGR growth in revenue, net profit and operating profit are all very good. Industry comparison, if you make, most of the parameters are very good. Price performance is almost like multibagger. Almost like multibagger, though not exactly, but multibagger returns almost. Now, if you look at the quarterly results, net sales are 3,889 crores, whereas last year, same Q1, 2,737 crores only. That means year-on-year growth is 42%. But compared to March quarter, that is exactly previous quarter, minus 10% degrowth. Now net profit is 403. Here also previous quarter is 435, slightly more. So the year-on-year degrowth is there, minus 7%. But quarter-on-quarter, if you take, it is 80% growth. So other things are same. Now, if you look at the annual figures for March 2020 to 2021, 2022, 2023 and trailing 12 months, sales have grown from 8,830 crores to 15,261 crores in 5 years. Not 5 years exactly, slightly less. So the growth in sales is very good. Profit before tax has grown from 1,010 crores to 1,943 crores, about 90% growth. Net profit has grown from 766 to 1,463, so almost double. So it is multi-bagger return, generally speaking. So profit growth is there, sales growth is there, and they have got a very good plan to grow it further also. Now promoters' share of the equity is 66.21, FII is 9.78, DIA is 9.34, public 14.67. So reasonable. FIIs have increased their holding, but promoters have decreased their holding slightly, DIAs have decreased their holding slightly, public slightly less. It has been observed by the FIIs. So revenue growth is there in spite of low commodity prices. But revenue has grown by 42%. Why? How? Strong volume growth. EBITDA margin improved by 280 basis points year on year to 14%. Judicious price revisions, better operating leverage and favorable business mix all contributed to the margin improvement. Profit after tax has grown by 81% year on year. It is very good. Product mix as on date: wires and cables 89%, FMEG 8%, others 3%. Domestic business, geographical wise, if you look at that, domestic business contributes 91%, international business contributes 9%, but international business is growing very fast. Therefore, from 9% it may grow much further above. So, in wires and cables are outperforming compared to wires. International business has grown 88% year on year. So, like that, if it grows from 9%, it may grow even to 15%, something like that in the coming years. The company has expanded its footprint to 72 countries now, and it is growing there. Margin improvement is there, very good, because of judicious price revisions, better operating leverage, and strong growth in international business. Now, locally, geographical spread of the business, if you see that, North has grown significantly, contributing 31%, South next comes at 29%, East 20%, West 20%. FMEG is slightly demand is lower. Then another segment is EPS, that is also growing reasonably well. It is expected to grow in high single digit growth. And among the brands, Polycab is among the top 50 best Indian brands. Receivable days have come down from 59 to 31. Payable days have come down from 102 to 70. Net working capital days 67 to 74 increase. Inventory days also 110 to 113 increase is there. Now, considering all these things, most of the points are plus. Year on year growth is very significant, but quarter on quarter growth is very disappointing. But quarter on quarter growth can be explained. Normally fourth quarter growth is, if you take the whole year growth and last 3 months, last 3 quarters growth, if you reduce that, what remains is the revenue growth, profit growth, etc. That computation is slightly different from the other 3 quarters. Therefore, don't go by Q4 results alone. You go by year on year results. That has grown very well, and probably based on the plans that Polycab has, it may grow further very well in the times to come. I will be back with you with another good company. Now, this time the public sector banks have all grown very well. We will cover some of them also and some other very good companies. Thank you. Please look at this figure, look at this analysis 2-3 times before you take your decisions. That's one of the important things that you have to do. And if you have not yet subscribed, please subscribe to this channel. It is free. And tell your friends also. I will give you mostly very good companies only. From my side, that is how I look at companies. I won't give you useless companies. If I give a useless company, I will tell you that it is a useless company. But otherwise, if I don't tell that, you assume that it's a good company. But be a long-term investor. Okay? Thank you. I will come before you with a very good company.